Bitcoin was supposed to break the system, right? The untouchable king, the original giant, the absolute apex predator of the digital realm. But are we actually watching the slow, comfortable collapse of the most powerful story crypto ever sold? Because let's be honest, the market feels totally different right now. The energy is weaker, and that untouchable crown suddenly looks incredibly unstable. In this explainer, we are diving straight into the raw power dynamics, the numbers, and the shifting narrative. Has the ultimate crypto myth finally started to unravel?
We have to smash straight into the biggest, most uncomfortable question in the entire space right now. Has Wall Street made Bitcoin soft? Was this grand financial revolution simply bought out by the very system it was supposed to destroy? This isn't just about price action made. This is about status. It's about power. Are we looking at a revolutionary king or just legacy hype wearing a fresh digital outfit?
Section 1. The myth of the king. To grasp how drastically things have shifted, we've got to look back at the original myth. Since 2009, Bitcoin was pitched as this untouchable, decentralized beast. Governments couldn't kill it, banks couldn't control it. It was built on absolute scarcity and pure, unadulterated rebellion.
And to be fair, that myth built an absolute empire. We are talking about a staggering $1.33 trillion market cap. It completely crushes the runner-up, Ethereum, which sits at just a fraction of that size. And this dominance, it's no accident. It's built on massive brand recognition, deep liquidity, and this hardcore belief that Bitcoin is the undisputed heavyweight champion of the world.
But here is the massive catch. The DNA has changed. We've gone from a 2009 cypherpunk dream, a peer-to-peer underground currency capped at 21 million coins, straight into a 2026 institutional asset. Today, Bitcoin literally behaves like a traditional macro hedge. It's what massive funds use to protect against global inflation. It's no longer the rebellious outsider. It's just a standard line item in a corporate portfolio. The rebellion essentially put on a suit and tie.
Which brings us to Section 2, Wall Street hijacks the throne. So who actually wears the crown now? Traditional finance didn't just adopt Bitcoin, they completely absorbed its supply. The real usurpers aren't competing blockchains. No, they are the asset managers on Wall Street who figured out exactly how to hijack the throne without writing a single line of code.
Look at this staggering number, $36.2 billion. That is the record-breaking net inflow into spot Bitcoin ETFs in just their very first year. When institutional buyers start hoovering up 9 times the daily new supply through a single product category, the whole market structure fundamentally breaks and remolds. The float shrinks, the volatility profile shifts completely. Wall Street didn't beat the king, they just straight up bought him.
And this institutional wave, it's getting actual government backing now. We're actively watching US legislation move to codify Bitcoin from a tolerated seized asset to a strategic reserve asset. If that goes through, we're looking at another $19 billion in inflows. Just think about the sheer irony for a second. The asset designed to bypass governments is literally being stockpiled by them.
The current dynamic is clear as day. Despite all the massive market pressures and pullbacks we saw in 2026, Bitcoin's dominance is actually climbing. But, and this is a massive but, it's not climbing out of pure strength, it's climbing because capital is terrified. During these phases of uncertainty, liquidity just flees the altcoin rebellion and retreats to Bitcoin as a safe haven. It's consolidating power, absolutely, but mostly out of pure fear.
Section 3, Criminals Abandon the Crown. Now, this is where the narrative takes a really dramatic turn. If you want to know what the underground truly values, you have to look at what the black market is actually using. And the criminals, they have completely dumped the original king.
What's genuinely shocking here is the total reversal of the old stereotype. 84% of illicit transaction volume is now running on stablecoins, primarily Tether. Bitcoin and the rest of the crypto market make up a measly 16%. Bitcoin's transparent public ledger is now a massive liability for bad actors. The underworld has well and truly moved on. And the numbers are just brutal. $154 billion flowed into illicit addresses in 2025 alone. How are they moving it? You've got Chinese underground banking networks laundering billions, and North Korean hackers draining decentralized finance platforms for $280 million a pop. They are using cross-chain bridges and mixers, digital tools specifically built to scramble and hide the money trail. They are bypassing Bitcoin's base layer entirely. The true shadow economy doesn't need Bitcoin anymore, plain and simple.
Section 4. The network under siege.
So, while the shadow economy abandons it and Wall Street buys it up, the physical network itself is showing massive vulnerabilities. We are seeing incredible physical strain on the actual miners who secure this empire.
Look at this sudden collapse in the hash rate. That's the raw computational power securing the network. After hitting the historic 1 zettahash milestone, which is a ridiculous 1 sextillion hashes per second, by the way, the network saw its sharpest short-term drawdown since the 2021 China mining ban. The difficulty stayed brutally high, but the actual computational power securing everything just buckled.
And why should we care? Because it proves Bitcoin is not invincible to the physical world. When local grids in places like Texas get hit with extreme weather and energy shocks, miners are literally forced to power down to save the infrastructure. Profit margins compress, the machines go completely quiet, and it's a harsh reminder that this digital empire requires massive, fragile, physical energy just to stay alive.
Which really tests its biggest narrative, doesn't it? Digital gold. When we price Bitcoin directly against actual gold ounces, the original undisputed safe haven, the story gets really complicated. During major geopolitical stress in 2026, Bitcoin held its ground, yeah, but it didn't soar past the ultimate historical standard. It's a heavy, brutal fight to prove it can genuinely replace physical gold when global fear hits a boiling point.
Section 5. A shiny new cage. So how on earth is the Bitcoin ecosystem responding to this massive identity crisis? Well, they aren't rolling over. They are frantically building new walls, trying to construct a shiny new cage to keep the asset relevant beyond just gathering dust in a BlackRock vaults.
They are desperately rebuilding the fortress. You've got the Lightning Network pushing hard for millisecond peer-to-peer settlements. You have this massive industry push for BTC-FI, trying to unlock a $100 billion yield opportunity right on top of the network. And corporate treasuries are aggressively issuing debt to adopt the Bitcoin standard and stockpile more coins. It's a high-stakes, breathless race to give Bitcoin actual usable utility again.
But despite all of this frantic building, the market's enthusiasm is just drained. Look at this momentum signal. It's been flashing negative since late 2025. We are trapped in what analysts are calling the hope-fear zone. It's pure consolidation. The market is exhausted. The price action reflects a space that honestly doesn't know if it's gearing up for a massive breakout or if it's just bleeding out slowly.
Section 6. Digital King or Falling Empire. Which brings us to the ultimate climax of this whole explainer. We have to force a judgment here. Are we looking at the reigning digital king, or are we watching the slow, comfortable decline of a falling empire?
The stakes literally could not be higher. There is $60 trillion in traditional wealth management just waiting in the wings. As the major brokerages Morgan Stanley, Bank of America, Goldman Sachs greenlight access to these ETFs, they're going to swallow up whatever remaining supply is out there. The DNA of Bitcoin changes permanently. It transitions fully from a chaotic, revolutionary peer-to-peer network to a sterile institution-to-institution reserve asset.
So I'm going to leave you with this hard, uncomfortable reality. The underground doesn't want it anymore. The physical energy grids can barely sustain it, and traditional finance has almost entirely bought it. Is Bitcoin really still the untouchable revolutionary king we were all sold? Or did the greatest financial rebellion in history just successfully cash out and become Wall Street's newest heavily regulated pet? You tell me.